As a real estate agent, I am constantly getting the question, is now the time to invest in the Gold Coast market, or should I be holding off? Really simply, the Gold Coast market has been performing incredibly well over the last 6 to 12 months. According to the Knight Frank Prime Global Cities Index, we were number 10 of international cities. So we're the only Australian city to make it into that top 10 bracket of international property markets. So no question, Gold Coast has been doing really well for 6 to 12 months. The question is, are we going to continue to do well? Is this the beginning of a big upward swing, or is it an anomaly, essentially? So to speculate, let's look at what was driving that property price up in the first place. No question, we've been seeing people flock to the Gold Coast. Since COVID, about 450,000 expats have moved back into Australia, and they've been disproportionately moving back into lifestyle cities like the Gold Coast. Not only that, but when you look at the Australian interstate migration figures, which you can see up on this graph, you'll see Gold Coast is performing, or Southeast Queensland, sorry, is performing far better than other cities. People are moving from Melbourne, they're moving up from Sydney. If you're going to be able to work from home, which was happening anyway, but obviously COVID's driving that much faster. If you're going to be able to work from home, you might as well be working from a home in a beautiful place. And well, it's hard to find a more beautiful place than the Gold Coast. So we've been seeing huge population growth on the Gold Coast. We've been seeing people move up, and that's been driving the market. I've been speaking to many different real estate agents, and we're all experiencing the same thing. We've never seen demand as much from owner-occupiers as we are right now. About 80% of the people who are inquiring on our property, they're inquiring on a property to live in, not to invest in. So that's been driving the market. Is that going to continue to drive the market? I would say yes, and I'd say yes for two reasons. We can look at the data on what people are searching for. Normally people will research a market heavily before they buy a house in it. Normally, I would say 6 to 8 months is a really good general rule on how long people will be researching before they buy. And in 2020, we were the highest performing marketplace in realestate.com. More people searched for Gold Coast than they did for Melbourne, Sydney, any other market. So if people are researching heavily, that heavy research 6 to 8 months ago should relate to a high investment or a high number of people actually acting on that research over the next few months now. The other main factor is the number of people who've been coming up here renting with the intention to buy in the future. So a lot of people are taking 6 to 12 month leases when they're renting. They're moving up into a new city. They want to live there for a little while before they settle down and actually buy a property. It's a normal behavior, and it's one we're seeing a lot of. So those people who've taken out leases, maybe at the end of last year or the beginning of this year, they're going to be interacting with the property market 6 to 12 months after they took out those leases. So that's a flurry of future activity that we're going to see, again, in the owner-occupier market. So the market's been driven by owner-occupiers. It's going to continue to be driven by owner-occupiers. But the group that we haven't seen yet, and the group that I think we're going to see a lot more of, are the investors. Now, investors have been very slow to warm to the Gold Coast market, with good reason. In 2006, 2007, we saw a lot of people buying investment properties in the Gold Coast. It was a boom driven by investors, a boom driven by people buying holiday homes, and a boom driven by a lot of lifestyle investors. So people buying a holiday home or an apartment that they were going to live in for 2 months of the year and then rent out for the other 10 months. What happened when the global financial crisis hit? People don't sell their family home. They sell their investment. When they're in financial distress, investments are the first to go. With a heavily investor-laden market, which was what the Gold Coast was, we saw our property prices crash, and it was a huge crash. We went from a point where our median apartment price was higher than Sydney's to a point where our median apartment price was as low as 30% of Sydney's. We really just saw ourselves drop like a stone, and that has scared away investors, and it's kept them away really for the last 12 years. So investors have been scared away, but what I think is going to drive those investors back or bring those investors back, number one, is that this boom is not what happened in 2006, 2007. This is a boom driven by owner-occupiers. The second main factor is that our returns are climbing. When we have a rental open home now, we can expect 30 to 40 people to be applying for the same property. It's been driving rental prices up 15, 20, 25% depending on the suburb. So we're seeing really strong growth in rental prices, and that really strong growth in rental prices means that when you're buying a property, you're getting a better return. In Melbourne and Sydney, you might be expecting 2.5%, 3% returns. People get ecstatic over a 4% return in Melbourne and Sydney at the moment. Up on the Gold Coast, 5% returns have become the norm. And with the property growth going the way, or the rental price growth going the way it's going, we can be looking at 6% returns. We can be looking at 7% returns. Those sorts of returns are going to bring the investors' eyes back up to the Gold Coast. So yes, it's been driven by an owner-occupier demographic really strongly so far, but what we're going to see is a driving force of people investing, I believe. We're going to start to see those investors coming up. The final thing that we need to talk about, obviously all of that fits into demand. I've been talking about the demand on property. Let's talk about supply. The home builder grant, had a really interesting effect on the marketplace, and that was to push developers to get their stock on the market in time for buyers to be able to get that grant, that $25,000 grant. So projects that I was working on that were supposed to be rolled out over several years, 2019, 2020, 2021, 2022, we had developers saying, you know what, we've got to get all of it out, we've got to get it all out now. We've got to push the construction, we've got to push everything so that people will be able to claim that $25,000. So projects that I was expecting to be selling to people now have sold out because they were driven forward and because people were trying to get those sales quickly. Which means that right now, the amount of new property on the market on the Gold Coast is a shadow of what it was 6 months ago. And the amount of new property coming up is decreased as well. The home builder grant really pushed forward a lot of that stock, and so that got eaten up in the surge of demand that we had previously. So now, with this upcoming demand, we don't have the stock to meet the demand. So we are looking at supply shortages moving forward on the Gold Coast. So that combination of factors, an increase in demand and a decrease in supply, means if you're asking me right now, where's the property market going? I'm going to say up. And I'm going to say up for quite a number of years. And because this property boom is driven by positive factors, it's driven by population growth, it's driven by sustainable factors, I don't think we're going to see the property market come back down again. I think if you're holding out to buy thinking that these property prices are going to drop, I think you're hoping for something that may never happen. So now's the time to invest. Come up to the Gold Coast. It's a market that's really exciting over the next few years.